Hey, it's Mack with PriceActionTradingSystem.com, and it's Tuesday. It's September the 24th. This will be our chart lesson for today. And the way I saw this starting out was a trading range, this range right in here, specifically this very tight range. I really had it down in here originally like so. But then we made our high here, so I kind of moved it up. And that was when we made the high here, that was a retest of these lows over here, so you can see that. Um, And that's where I ended up leaving it right in there, across there. And you can see when we got above it here, we came back and retested and got a chance to go along there. But again, I started with it right in here. And so this is just a tight trading range. And if you were here, you could have traded either side of this range, really. But that was, pretty early this morning. And then we had this breakout. And what normally happens when you break out of congestion or a trading range, prices fail and come back, and you have two legs back here, and you can see that if you saw this and you were trading by then, you could have traded this right here. This was just prior to the open, so most of you probably saw this, but that's a failed breakout. It's a little bit aggressive. There are two legs up, even though there's not a break lower there. You could treat this like a second entry, because notice that first leg, then a little correction, then another leg up. It's not a great signal bar either, but it is a small one near the highs. So, it's a chance to get short. Again, it's pretty aggressive. It's right before they open, and sometimes things can change right after they open. But it meets our rules. It's there. If you saw it, great job. But I thought it's better to wait on the second entry, which came right here. And this is one where when it broke lower, you wait on it to break lower. And when this closed, I just dropped a limit order right in here, and or you should drop a limit order. It's not a great signal bar right here, but it's a second entry. It's a failed breakout. So if you want to get short, the idea is to try to get short as close to the high up here without getting too short down here coming back. But the odds are, after a failed breakout, if it's truly going to be a failed breakout, you're going to the other side. So a chance to get short, use a limit order here. Second entry short. Different ways you could have looked at it, but I liked it for a short. And then you get a failed, it's not really a failed second entry long because it would have made a scalper's profit, but in the bigger scheme, it's a failure to go higher. It is a break above this little trend channel that we had working down, and you could have gotten this off the highs or the lows before this got here. You can see that, and it's a big bearish bar. It's a failed, you can treat this like a failed break out of the trend line, a failed break out of the trading range, a failed break, or a failed second entry long, even though technically it's not. It's a failure to go any higher, and then prices start moving down again. And really there's a higher high here, so there's kind of a second entry short. I didn't like circling this one or noting this is a good trade because it's just all that overlap. Notice 1, 2, 3, 4, 5 bars. Just didn't think it looked really good to me. And it's getting closer to these lows. But then you go down here and you try to go higher twice. Notice this, you got a new low, first entry, pull back, second entry, and even if you count off the lows, first entry short, second entry short. It's a nice bearish bar. It's right off that trend line again. So it's a breakout pullback short. And generally when you break, you have a failure out one side, you're going to have one of similar length out the other side. And so that was a clue that we might go a little bit lower here. And sure enough, we go lower, we fail, and we come back. So I like this one, but only because of the fact that there's a failed second entry long, and it is a failed second, or it is a second entry short as well. So, and people always ask me this, they'll see some other trade and they'll say, well, what was wrong with this trade? Like, what was wrong with going long here? You could have gone long there if you wanted to, but it doesn't fit our rules well because it's, we're trending down at the moment and it's a counter trend trade and you got a little channel. So we don't like to counter trend trade if we don't have to. And really on range days, you can take trades off both sides of the range. But this is even though this is a range going down through here, there's a short-term trend, and the odds are the trend's probably not going to change back until we reach the other side of the range, which is down here. And you notice we end up going a little lower, just like we went a little higher here, and then we turn and come out. And I don't like going long down here because of all the overlap. There's just not really a good place to enter. You might have thought about going long here, but there's too big a chance it pulls back here. It catches you there and pulls back because we're coming off. If you drew this line off those first two, and you could have seen this channel either way that I have it marked here. I was looking at it like this tighter channel, and you can see it gave some good entries. But I think there's a bigger channel in play there, and if you just drew your, even if you just drew your line off these highs, you still could drag this down and get this same spot here. So hopefully you see that. So there was a couple of different ways of seeing this right here, but either way you get to the same place. You get the break, a new high, and then we're selling off now, or at least we're correcting. We're back inside the bigger range. And as this moved up, I moved mine up right across. Actually, I think I kept it right there because you got the most touches with some closes across there. And that made this trade a little questionable, but it's a failed second entry short. It's 2 times to, let me show you this. We're coming up. You got a new low right here. You're coming up first entry short. You're coming up then a second entry short. So that's a failed second entry short. I actually took that entry right there, but then we break a little higher and pull back, and then go higher again. So now it's acting kind of like a breakout pullback long if you were looking at your line right across there, or maybe you even had it there. It may even fit just a tad better right there because you still get these low touches, and then you get some touches in here on both sides today as well. So either way you saw that, it's the same thing. Sometimes a tick or two doesn't really matter on exactly where the highs of the range are. I mean, you could have even called it up here if you wanted to, but then we haven't reached it yet, so it still gives you a reason to get in right there. So, but I like this entry, and I circled the whole thing because you could have taken either one of them. The best setup was here, and the reason is because it was the failed second entry short. It did come back and test that low again, but as long as your stop was below the signal bar like we teach it, you were safe. Made me a little nervous when it turned down real quick because it bounced off my exit order right there. Or actually, that was this time. I'm sorry. Scratch that. Sometimes you'll see it bounce off your exit order and then come back like it did here, and then it goes on back up, and it just runs everybody's stops. And that's the idea. And you got to be thick-skinned to hang in when it's turning down like that, because sometimes it will turn into a loss. So either you scratch it and take what you can get, or you hold on and hope you read it right. And I know that's hard to do sometimes, but with more experience and time watching prices, there's still no guarantees, but you'll get better at it. That's all I can tell you. And but I was trading off this channel at that point, and I just drew it right off those first couple of swings right there, and you can see that it came into play right there. And so there's another chance to get on board here. It's a breakout pullback long from that area right there. The market was just going higher. It was really struggling in here because there's lots of resistance because of all these previous highs in here and kind of a range day. But the channel here this little channel is in play, and you can't ignore it. Let me get this out of the way because it just probably makes it harder to see. But this is a fairly strong trend when prices stay away from the EMA for that long. And you even had a chance to enter here. I didn't circle these because we were getting so close to these highs right across here. I was just really nervous about them, and I didn't like, it's not a great setup bar till here, and then you're really close, and then this one's even closer. So you might have considered taking this one, but then when you saw it starting to break down here and we're starting to get further away from this side, that's a clue that it may be going to fall a little bit lower. And then this trade right here, notice your new high, First entry, pull back. Second entry, it's a double bottom, kind of a triple bottom across there, but it's a second entry long. And again, they tried to scare everybody out. Look how that turned down real bearish, and then it tried to go lower again. So now you got a failed second entry short, so that's a trap. And then it even tried to go lower once again right here. You can't really see that. And hopefully, and I'll show you this too in a minute, but and that's a higher low, so that's a double bottom pullback type entry with a higher low right there. And by that time they really had everybody trapped, and off it goes and it takes off. So I liked all three of those entries right there, and especially if you had this trend, if you drew that little trend line as well, and you could have found that one off the highs or the lows. Really, you get the same, you get it both ways. And then we get you know, you get a little bit of a break in here and a couple of little swings to a new high, and then we started selling off. So you could have seen it from either one of those, and I'm thinking this is probably the bigger channel, and this was just like the temporary short-term trend to the first, and once we touch the upper side, then we come down the lower side, and then we go up again. And that's generally how it works. So that's what I saw today through about lunchtime, a little after lunchtime. You know, these reversals, you had to see this as a range really to understand this reversal. And sometimes even with like a little tight trend channel, you did get a break here, but sometimes you may not get a break and you get an overshoot, and that's good enough to reverse it out too on these shorter term ones. What's really common on a range day is to get a break of this short-term trend channel and then not be able to make a new low because the range is so strong. And it was kind of like that here until you got the trap, and then it turns back down. I really considered drawing this one in green, but when you got the trap and you got a second entry short and it's coming right off that line and it's a breakout pullback, that's a pretty good sign. And also, while it's not in the same day's trading range, this is kind of one leg, then your correction, and then a second leg, and you can see we didn't quite make that, but that was kind of what I was shooting at for a target. And even if you just kind of used the last swing right there, you can see that one. Oops. And you can see that's almost a perfect measured move. That basically is a perfect measured move. So I'm guessing that some people were looking at that. I was looking at the bigger picture of it, and we didn't quite make that one. And then I'll show you one other thing here. Notice the width of this range here. So if we break out of there and start heading higher, you're going to get a similar measured move, and you can see that is real close. Move that up to there. And you can see that was real close. Really, that's where I originally had that, and I originally had a perfect measured move based on where I had this line. So I'm going to go back and look and see where I originally had it. I think I had it right there. Because you got more touches in today on both sides of it. I think that's why I liked it right there. But then you measure that and move it up and bring that down, and that's exactly kind of where that resistance found with a little one tick break above. So it'll, you know, it won't always be perfect to the tick, but it should give you the general area. And you know, it's amazing how many times you will see it give you a measured move exactly to the tick, but just because you don't get exactly to the tick. And what I'll usually do if I've got some runners going and I'm shooting for that target, I'll put my order a tick or two in front of that just to make sure in case it comes up short. Plus, you don't want to put it right on it, because if it takes a limit order to fill it, and you don't want it to bump it and then turn and sell off, and then, you know, you got right to where you thought you were going but couldn't get filled. So, you know, use those target orders a tick or two in front of whatever target you're searching for. And you can still see we're still selling off here. Um, but I really, like I said, I really liked using this shorter term one, and then you get the break and then a couple legs up to a new high. But even if you use this one, you still get a break right in here, and then you get two measured legs up and you sell off. If you're looking at the bigger picture of a trading range, which that's yesterday's highs, you can see that. And that was previous some lows right there, so that's a good sign that it's a it's a important spot. And notice we also touched 1700. We're going to probably bounce around on either side of that number for a while, like we usually do, even if we're going lower or higher from here. And it's just very common to these century areas like 1600, 1700, 1500, 1800. They're emotional areas, and so you get a lot of tests, and it takes a while to work through them and to hold and that kind of thing. So, but that's what I saw today. As long as you're drawing your, I always tell people, some people will struggle with range days, especially with a reversal. And but it's pretty obvious the market's moving pretty strong by the time it moves all the way up in here and hardly has any pullbacks. And it just keeps on going, and we end up going all the way to 1700, 1701 actually, and testing that. So off the lows from 88 to 1701, that's a pretty good move. There's plenty of chance to make some money in there. Got a little iffy right in here. But notice how everything's still above the EMA. Notice how all the closes are still above the EMA. It's just a chance to try to add on. And with and even if you're wrong, you get a fairly small stop. And using this, because if it breaks below that, but a lot of times you got to give it more. Generally, what I'll do, let me put that line there. It makes it a little easier to see. If I'm going to enter off these lows, I'll put my stop a couple of ticks below, because it's amazing how many times they'll actually run the stops by running it down a tick and then letting it turn back up. So you got to be careful of that, where you put your stop, because if it's in a logical place, they may get it sometimes. You got to use the price action to hide your stops, so otherwise you'll just get stopped out on noise. And false stop runs is what they really are. I call them noise, but and it's amazing how many times they know where the stops are. I mean, you can see, the big boys can see where the stops are, and they know where they are, and they gun for them. So use the price action to help you hide your stops and put them in logical places. Most everybody's going to have theirs right below this by a tick, so if I've got room, I'll go 2 ticks or 3 ticks. Willing to give it an extra tick or two to prove to me that it's going lower, rather than just letting it tick 1 tick lower and stop you out and then go exactly where you thought it was going to go. So that's about it for today. I'm going to wrap it up. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.